Hey, it's Dave. So Tesla announced their Q4 2023 earnings yesterday, and it was somewhat of a controversial earnings report. The stock fell a lot yesterday and this morning as investors weren't impressed. In this video, I'll share my thoughts on where I think Tesla is at from a bigger picture. All right, so let's work backward from very long term to the short term. For the very long term, you've got Tesla's humanoid robot Optimus, and looks like progress is going very well. Elon Musk said that he thinks it's possible to sell some units of Optimus as early as next year. And if Tesla can deliver on that, that would be extremely bullish. Ultimately, the humanoid robot market has the potential to dwarf all other markets. So the bigger picture, what's happening with Optimus's development is probably the most important part of the Tesla story. However, as with new and unproven markets, we have a large diversion of opinions. Some people think Tesla will sell a gazillion humanoid robots, and some people think there isn't going to be demand for humanoid robots for another 10 years. It's going to be interesting how things play out. But overall, I personally would grade Tesla's execution on Optimus as very, very good. Moving a bit closer, we've got the mid-long-term opportunities, and we can include FSD and Tesla Energy in this. With FSD, I like what Tesla's doing with version 12. However, I need to try it out myself. It's just not enough hearing about it from others. I want to see firsthand how it handles things, both the good and the bad, and kind of make up my mind with it. And I think a lot is going to depend on how quickly Tesla can improve their new end-to-end neural net approach. As for a grade, I'll reserve my judgment until I can try out version 12 for myself. On Tesla Energy, Tesla continues to ramp production of energy storage, even though this last quarter was slightly down. I think we'll continue to see energy storage grow, and over time, it'll contribute to Tesla's financials more significantly. Overall, though, I grade Tesla Energy probably like an A- or so. Now let's move a bit closer in timeline and talk about Tesla's next-gen vehicle. Now personally, I was hoping the next-gen low-cost vehicle to start production by the end of 2024. But Elon is saying that they're expecting production to start the second half of 2025. That's actually quite a long wait between Model Y finishing ramping and the start of the next-gen low-cost vehicle. Ideally, you'd have more of a continuous transition where Tesla could continue to see unit growth by timing it where the next-gen low-cost vehicle starts ramping soon after Model Y finishes its ramp peak. But what we have right now is a sort of limbo time where it's tough for Tesla to significantly grow unit volume because Model 3 and Y have already ramped and in some ways have filled market demand, but the next generation vehicle isn't ready to be sold. There could be a few reasons for this. All of them, who knows, could be wrong, but nevertheless, here are some ideas. One, I think the next-gen vehicle could have come out earlier, but some things were delayed early on. Perhaps there was some disagreement regarding should it be a purely robotaxi platform versus a human-driven vehicle platform, or both. There could have been some other delays with wanting to make sure they have enough 4680 cells ramped, and they want to get to the point where they can support the next-gen platform. It's also possible that the new manufacturing methods for this next-gen platform are such a departure from traditional approaches that a lot of new machines need to be designed and made in order to build the production line. So in other words, they can't just order a lot of the machines, they need to make them themselves, and that's making the start of production pushed out a bit. Another possibility also is that Tesla expected to grow Model 3 and Model Y volumes greater in 2023 and 2024, but they've somewhat saturated the market for EVs at those price points. And I'm not sure if they're really seeing the demand increase they might have expected with price cuts. Regardless of the reason, it's somewhat a challenging place for Tesla to be right now. If they increase Model 3 and Model Y production this year, they can risk saturating demand even further and be forced to make even more price cuts, hurting margin even more. I'd imagine also there could have been disagreements also among Tesla management in the past year or so over what the right approach should be. Maybe some might have argued that Tesla should pause or even cut production of the Model Y and Model 3 so they don't need to keep cutting prices and they could keep their margins higher. But on the other side, some others might have argued for higher volume and lower margins in order to get out more cars to people. It seems like the side of growing volumes and cutting prices won out. But that kind of move can spook investors because it leads to lower gross margins. And it's not just lower gross margins that concern investors. It's the question of when and if those gross margins can improve. And also, what kind of gross margins can we expect from future Tesla vehicles? So the short-term question, let's say you're looking out over the next year to year and a half, is what products can Tesla ramp and grow with unit volumes? Seems like Model 3 and Model Y are tough to grow much. Model S and X are also tough. Cybertruck would be great to ramp, but management keeps on telling us that it's going to be a slow ramp because of its complexity. So even with Cybertruck, long term we might expect 250,000 units a year, but in 2024, how many units can we really expect? Maybe 50,000? Best case scenario 100,000, but I'm guessing probably closer to 50,000. But even with that, it's not going to grow much of Tesla's overall units for 2024. All right, so hindsight is bliss, but I wonder if Tesla should have planned out this transition period between the Model Y and their next-gen vehicle better. Maybe they could have released a Tesla van and ramped that vehicle alongside Cybertruck. Also, how about Tesla Semi, right? They could have been focusing energy on ramping Tesla Semi so that 2024 could really see significant, right, semi units, even 100,000 or more. Further, they could have come out with a variant of Model Y that's a bit boxier. Let's say it could have used the same wheelbase, but maybe look more like a SUV rather than a crossover. Anyways, regardless, we're left with an extended limbo period right now. And I don't think it's the end of the world for Tesla. And in the long term, having a couple of years between Model Y ramp finishing and the next gen vehicle is fine. It's ultimately about the quality of the products and how much people want them. That's going to drive sales and margins. Now, another thought on this is I think investors could handle this limbo period better if they had more insight on what would happen with Tesla's margins this year. If investors knew margins would improve over the course of the year, then being in a slow growth limbo period is fine. But with Tesla management giving investors unclear guidance regarding margins, it actually makes expectations more volatile. There are, of course, a few wildcards that could help Tesla this year. One is the point of sale federal tax credit, where customers in the US can get $7,500 off the price of the car at purchase. We'll see how much this helps demand. Another wildcard also is how much, if any, a better FSD version can help with Tesla sales. Now, it might not matter much in the first half of 2024, but if FSD V12 impresses people, it can possibly make a difference in the second half of 2024. Tesla's also doing a good job reducing the cost of goods sold. In other words, the cost to make a vehicle is coming down for Tesla. In fact, over $3,000, right, per car in the past year. And that can help if they can keep reducing the cost of goods sold even more this year. But ultimately, the question of gross margins might come down to the decision of what Tesla management will decide. Do they want to grow production even if it means more price cuts? Or will they hold production constant to try to stabilize margins and even try to improve them? A few more observations from Tesla's earnings report. One is that Tesla has decent cash in the bank, about $29 billion. They had $4.4 billion in free cash flow last year. In 2024, they're growing their CapEx investments to over $10 billion over the course of the year. I personally like Tesla investing aggressively in the future, especially with AI and compute. But some investors might think that this just lowers cash flow and they want Tesla to be a better car company and not an AI robotics company. Anyways, I still think the three most important things for Tesla in the future are: number one, Optimus humanoid robot; number two, full self-driving and robotaxis; and number three, their next generation low-cost vehicle. And I think Tesla is making good progress on each of these, albeit sometimes a bit late compared to expectations. All right, hope you're doing well. We'll see you guys in my next video. Thanks.